European finance ministers must be champing at the bit for the central bank to tighten.
So there's quite a lot of dynamics here to monitor, Steve. And actually, in order to discuss the macroeconomic picture in the Eurozone, I have with me the finance minister of Luxembourg, Pierre. Thank you for joining us today. The IMF has said that it is likely that there will be a downward revision to growth forecasts for the euro area when it presents the economic outlook next month. Does this statement from the IMF come as a surprise to you at all?
No, I think there's a concurring opinions. There's going to be a slight downturn in the European Union and in the euro area, but a very slight one. But let's keep in mind that the euro area and the EU has come out of the crisis in 2021 much more quickly than anticipated, and that the downturn was far lower than initially expected, thanks obviously to the Recovery and Resilience Fund and the solidarity that Europe showed in this crisis. The IMF, as the European Union, think that most countries, if not all countries, will have reached pre-crisis level of GDP during this year. In the case of Luxembourg, we did that in the beginning of 2021.
When it comes to specific measures that we're seeing right now across the Eurozone, some countries are targeting the unvaccinated part of the population. Luxembourg has a few restrictions when it comes to that as well. But are you planning to announce any sort of new measures targeting this specific part of the population in order to control some of the economic damage?
Well, it is clear that a country like mine, like many others in Europe, do not want to face again a lockdown or confinement of people. We need to encourage more people to get vaccinated, and in order to entice them to do so, there will be restrictions to access leisure places, and so there will be the 2G rules, so you cannot access some places without being vaccinated or healed. But in general, we would like to work with encouragement and not force people by law.
Let's look at the broader economic picture, though, because we're also expecting to hear from the ECB next week. And of course, there's quite a lot of focus on inflation. Are you in the camp that inflation is transitory or permanent?
Well, I'm probably in between. I would certainly not treat the topic as benign neglect. And since the very first day, I said there's a possibility that this inflation is going to stay with us quite longer. And there's a very simple reason for that. We have had, after the pandemic, we have had spontaneous and large growth in all the countries in the world. So bottlenecks for raw material or for supply, and that will obviously increase prices. The second thing is just psychological behavior of people not returning to work, and so one has to factor that in. Nobody can really read the future. I said change and uncertainty is there forever, as Heraclitus said. So let's watch, and I think that the ECB yesterday confirmed that they are now, let's say, less confident, or not 100% confident that it is only short term, and I think this is cautious as an approach, and that's the good way of doing it.
Given what you just said, and within this inflation context, do you think then the ECB next week should perhaps consider extending the PEP purchase program?
Well, you know, there's a big rule I learned in the 8 years. Do not talk about ECB policies. They are independent. And if I were to give them good advice, I would do that behind doors. But we've had a good exchange of view yesterday. And I would like to highlight that the ECB did a wonderful job in the past couple of years. If we have come out of this crisis so strongly, all of us in Europe, is thanks to the monetary policy of the ECB.
But how can the central bank square the fact that there's further uncertainty with the pandemic amid this new variant and what they've said before about ending the PEP?
Well,
what's the balance here?
Well, it's a balancing act, and inflation is, for example, higher in the United States than it is in Europe. So we have seen action from the Fed earlier than from the ECB. I think the ECB wants to be cautious in the coming weeks because the pandemic is not totally over yet. This is quite understandable. And then in a couple of weeks or months, we'll have a better view if inflation will continue to pick up. Let's also not forget that we have been waiting for inflation to reach the 2% level for 12, 13 years. Now we are there. There's also a little bit of good news in that if it is only temporary.